Hey Julia, what did you make of it?
James, we're not used to this seeing red on screen, but we did see a negative day, and given that it was a negative day, we did see some of those defensives coming back into favour. So it was a good day for telecom in the end, as well as utilities, and it was on a day where we saw consumer confidence jumping to a 2-year high. In fact, we've seen 3 consecutive months of increases in these numbers now. Another area doing well today was the energy and the material space, and that's really because of offshore leads, where we saw oil as well as gold up by around about 1%. And I guess there's different drivers driving these two things at the moment. If we have a look at gold, there's expectations around more easing as well as more asset buying from countries like Japan, which is helping gold prices. And on the oil side of things, the demand side of the equation hopes that the US recovery is going to stimulate demand in oil, really helping oil prices. But all up, we saw a pretty big day on the Australian share market, especially for Southern Cross Media. That stock was down by 7%. Looks like that 75% reach rule, which was expected to be abolished, now up in the air. So media stocks very much under the spotlight today, but all up, the Australian market declining 0.5%.
To the likely near to mid-term outlook for our market from the charts, I mean, is there still a positive upward trend, or are we treading water at the moment?
Well, the long-term trend is certainly positive. We're above the 200-day moving average. The slope is still up, and we were due for a pullback. So a healthy pullback, even up to the 5,000 or the 4,400 point level, would be quite welcome by the markets, because it has been such a strong, sustained move up. I guess the question is in terms of sector rotation at the moment, and that really came into question today, where we did see that move away from those financials, which have been rallying quite hard, and we did see a bit of movement into the materials, which is seen as an undervalued area. And generally, if we have a look at the global market, I guess there's this big question around the great rotation. Are we seeing a rotation more into those growth areas? And the general rule of thumb is basically you never go short commodities when you start to see accelerating growth in the global economy. And we've started to see some good numbers now coming out of the US. In terms of commodity prices, the market had been pricing in some risks, especially given the risks of China and the property market there. And it was interesting to see that in Shanghai today, that we did see property stocks coming under pressure. But I think that's now being priced into commodity stocks. But the other part of the equation, of course, is now that we are starting to see a much rosier global picture in terms of the US economy, and that's stimulating the demand expectations. The thing not to forget about is that commodities aren't without their risks, and that's on the supply side as well as the demand side. And often we don't talk about the supply side, but on the supply side of things, we've got a lot of supply coming on board in terms of key commodities like iron ore and in terms of copper, and that could have an impact on prices as well. So I guess a big question mark, and analysts divided at the moment in whether we are seeing this great rotation into commodities and away from some of the more overvalued sectors and sectors that have run hard, like the financial space. Before today, we did see those financial sectors, the financial sector coming under a lot of pressure. Brokerage houses now becoming quite cautious in terms of the valuations that we're seeing on the banks.